Today, we're going to be trying something new. We're going to be reviewing this Twitter page here, Coinfessions. So it says anonymous crypto confessions by this guy here, Illustrate Alpha. So you can submit your confession in this form. And yeah, let's call today's episode a bit of edutainment, bit of education, bit of entertainment. And let's start reading these things. So I think this Twitter page is pretty good because it can give you a good understanding of what is actually happening with the participants in crypto, because all you hear is the survivor bias, which is you only hear the success stories. So you only hear the survivors who have made a lot of money, and they're the ones that scream at the top of their lungs, telling the world about how much they have made. But in this game of crypto, most people lose. 99.9% of people, they actually lose money in crypto. So let's read these Coinfessions. So first one, I followed an influencer's advice and punted my retirement money, $500,000 on Jewel at the top. I cannot believe what happened, and I still owe taxes that I cannot pay. Guessing Jewel, like every other cryptocurrency, is down a lot. And the poor guy, lost $500,000. And this is the big argument in crypto where it's all about, hey, let's decentralize everything. Let's allow everybody to have access to the financial markets. But the sad reality is, I believe the laws are set up for a reason. Like the high net worth individual laws, like you can't invest in risky things like startups and all of that unless you have like $1 million net worth and you're making like roughly $250,000 per year. I think that's set up for a reason, because stuff like this happens all the time. You actually have to protect people from messing up their own life. Like in the moment, they feel like they're onto something, it's and they don't realize it's too good to be true. And most people, they just really hurt themselves. So yeah, it's not a bad one to start. Let's skip this one. That's not really anything. All right, next one. I gambled away over $250,000 crypto. I said, fuck it. Took out a $35,000 loan and won it all back, plus a little on top in 5 days. I paid the loan back. Fucking feels good, man. All right. So this guy lost $250,000 and then he took out money. So you're literally taking out a loan to gamble more. In this case, he got lucky and he made it all back in 5 days. But what is that in terms of a gain? It's like 35,000 to 250 again. Man, that's like a 7x. So you made 7 times your money in like 5 days. But thank God this guy actually paid the loan back, because what do most people do in this scenario? They think, oh, it's actually easy. If I made 7x in 5 days, what can I make in the next 5 days? I might make another 7x. So I've seen many, many stories like this, but most of the time they don't pay it back and they lose even bigger again. So this is definitely survivor bias here. You're extremely lucky, extremely lucky to make that in 5 days. For every person that tried to do what this guy did, you probably have at least 1,000 losers, if not even more. All right, let's go to the next one. I manage a small crypto fund. Last summer, I had my first child and I bought a house with crypto that I'd been stacking since 2014. I was on top of the world in the wake of the Three Arrows Capital. That's, we made a video on that. They blew up. And the Luna blow up. I lost nearly all of it margin trading and had a close friend commit suicide. Man, this one's gone downhill really quick. Now I feel utterly depressed and alone in this space without any real crypto native friends to turn to it for advice. Man, it's going to be tough. A lot of people in similar scenarios now. Really feel sorry for these type of people. My marriage is showing signs of cracks, and it's tough for me to look at my infant son without feeling like I failed him. And so here I am typing into anonymous form on Saturday while I grind my ass off to desperately try to make things right. This is the worst. Like, he mentions close friend committing suicide, and you can see, like, you can just feel his emotions. He's going through depression. This is sadly, it's the Wall Street cheat sheet 101. When we check out the Wall Street cheat sheet, sometimes we forget, like, depression literally means you are actually depressed. Not you feel a little bit sad. You are actually depressed. And something that was really shocking to me, when I went through the bear market in crypto in 2018, I saw a lot of videos on Twitter of people committing suicide in the crypto space. It seems like this guy, he wasn't in the crypto space, the close friend that committed suicide, but that does happen at the end of depression. So that's like, you can kind of see so far based on all the videos that I've made during this bear market in crypto, it's kind of on the more negative side, but it's because I really want to help from people not ending up like this. Like, it is just the worst thing to see. Like, and like, I have nothing against people. Like, trading and investing is the hardest thing because everybody, they want to have a good life. And it's like a ticket to freedom. That's what investing and trading is about. And what the sale is with crypto, it's, hey, we're allowing you access to these deals from day one, and you can make money like the VC guys made with Uber and all of these other companies. So come and buy our ticket to freedom. But it never works out. And for most people, it ends with a bad scenario. So kind of like another analogy that I like to talk about is, if you're learning to swim for the first time, wouldn't you like it for the teacher to tell you, hey, this pool is really, really, really deep, or this, you're jumping into an ocean right now? Like, I would really want someone to tell me that so I don't drown and die. So I'm trying to be like that instructor. Anyway, let's go on to the next one. I noticed my friend get into crypto and primarily into NFTs. After a month of tracking his portfolio, I noticed he made some decent profit, so I decided to front run his ENS name. So these ENS names, it's kind of like your .com. Like, you could have, for me, dylanweston.com, .au, or whatever. But instead you have like .ethereum. So people believe you're going to use these when crypto becomes big in the future. I'm not sure if I 100% agree. But anyway, he front ran his friend with his own name. So imagine you bought your best friend's name, and my friend ended up paying 10 times his bid after declining his multiple offers multiple times. Man, that's some crypto shit for you. That's what they do. This is, yeah. Not sure if that's legit, but I wouldn't be surprised, man. People are out here to make money. The crypto people, that's what they're all about. They always talk that they're going to save the world and all of this stuff. I don't see anyone building. I see people just ripping each other off left, right, and center. All right, next one. I've been trying to get a job in crypto for the last few months. As a girl, sometimes it feels like it's a boys' club. I don't know how to fit in. Maybe I'm just bad at networking. Yeah, I'm not too sure what to say about that one. I would think it'd be easy to get in. If there's supply versus demand, a whole heap of geeks, whole heap of boys, I feel like it'd be easy to get into the network as a female, but I don't know. Could be wrong. So my girlfriend and I invested $3,000 each last November in GameFi. So it's probably like a DeFi platform, I'm guessing. That's down, or maybe it's a token. That's down 25x. I'm not sure how that works. You're kind of doing, it's better to do a percentage. You're down 25x. So whatever, that'll be like, you're down 96%, I'm guessing, because if it'll be down to 4%, 4 times 25 will get you back to 100. So yeah, I'm guessing they're down 96% on their investment. I have roughly, check the maths, I have individually dollar cost averaged DCA'd our way back to only a 5x loss. So they're averaging down on the loser. They keep on buying more and more and more. So the average buy price goes lower. A 5x loss, and we now hold 1% of the supply. Man, it must be, it is a coin, must be a very, very small coin. You have 1% of the whole supply. You're going to have liquidity issues. You're not actually going to be able to sell out. If you sell out, you're going to dump the price so badly. So I spent 24,000, man, I spent 24,000 to make our losses appear smaller and to ensure if she ever wanted to cash out, she will be made whole. If it moons again, I will still split everything 50-50. Man, this is a bad scenario to be in. If you own 1% of the supply and it's only $24,000, this is a tiny, tiny market cap coin. So now, you can't sell back at the same price that you bought at, because you will smash the order book all the way down lower and lower and lower, and you won't be able to get out at the same price. This is not the way to fix your problems. Like, sometimes it's better just cut your loss and then move onwards. So for most people, if that guy was in that scenario and he came to me for advice, I'd say, hey man, cut your loss, wait until the bull market returns, because then the odds are in your favor. You're betting with the trend. It's like you have the wind at your back, or you're riding an actual wave. And in this time, take some time off and reflect. Actually think about what's going on. Like this is like putting a bloody band-aid. You've chopped your whole entire arm and your leg off, and now you just want to put a band-aid on top. It's not the solution at all. Next one, whenever crypto enters in a bear market, I update the costs on all my assets in Gecko. It's like a website, CoinGecko, I think, to zero to keep me from panic selling. So there's like an app, tracks all of your buys and all of that stuff. Your buys and your sells, sees where your cost basis is. And this fella, to make his emotions a little bit better, he puts his cost basis that he bought at zero on all the coins. Again, some typical crypto stuff. Next one, there was a guy in class that was nicknamed the Bitcoin Prophet, and he used to talk a lot about it back when it wasn't even worth $1. Wow, that's really early. I still followed him on social media since we talked once in a while. Last year, he simply vanished. Godspeed, bro. So yeah, I'm not sure exactly what this means, but just because you came in early doesn't mean you're actually smart. Sometimes, well, most of the time you got lucky. Sometimes a lot of these people, they think it's, those big gains. Because imagine if you invested before $1, when the price goes up from $1 to 1,000, that's 1,000 times your money. So you made so much in that time. You then get desensitized to normal results. Like normal results are between 10 and 20% returns every single year. So imagine 1,000x. So what happens to these guys? Because you can't get another 1,000x, because 1,000 times 1,000 is like a million. Then what these guys, a lot of them, because they have that gambling bug now, they go and they start trading with leverage. So they put all their Bitcoin on these websites like Binance and all of this stuff, FTX, where you can borrow a whole heap of money, and they want even faster results. And a lot of them, they lose everything. And then it's like that guy from before, they enter into depression and you don't hear from them again. Another thing is as well, I've seen before, but back in the day, it used to be like everyone in Bitcoin, they didn't want to show their face. They wanted to stay anonymous. I don't know if I'm allowed to even say this, but I've seen videos where a guy has gone on a holiday to Mexico and they don't come back. And they were prominent figures in the space, or at least they had decent sized followings. I'm not sure if they're trying to run away and evade taxes, or something actually happened to them. I've seen that a few times, and it's been a coincidence. As soon as they're shown their face, they're vanished. All right, next. Went into huge debt investing in crypto with credit cards. All right, this is not a smart idea. Went into huge debt investing in crypto cards. You never want to do this stuff, because even if you're using standard leverage, which has a lower interest rate, people are never successful, because whenever you use leverage, you're just heightening the moves. And the moves in crypto, they're already big enough, and they're just going to play on your emotions, and you're going to end up selling on the dips, and you're going to be buying on the tops and FOMOing in and out. But when using a credit card, the interest rate is just way, way, way too high. So now that's adding even more pressure. And what I like to say is, when I teach investing, it's all about, you want to have very small position sizing. So you almost don't even care if it wins or loses. Then you have no emotions in the game. And then you can actually think, in a proper way. Because if you put way too much money on the line, you have way too much stress. And what do we know? If you have way too much stress, your IQ drops. Anyway, with this one, I was unable to repay the creditors and ended up going bankrupt. The only good thing about this was that I literally had no assets. So since I had nothing, I almost lost nothing. All right, I'm glad I have made this mistake early in my life. That's a good point. You do want to make these mistakes earlier in your life, because I've said about it in other videos in the past, where people have started investing at the perfect time after the 2008 financial crisis, when we entered into a bull market again in like 2009 and 2010. And then the market starts pumping and it starts going crazy. And we were in literally the longest bull market, from like 2010 to 2022. It's like a 12-year bull market. It really hasn't happened before. So people have made so much money for 12 years, but then you may have one mistake that you can't see, one risk that you don't have the knowledge to be able to see that risk, and then that risk presents itself, and then you lose everything. So it is possible, if you don't have all the knowledge, You can't see all the risks, and you can lose 12 years worth of gains. So I think this is what happened to Three Arrows Capital. They made all of this money, but they had a couple of risks that they didn't see properly. They didn't account for properly, and they lost billions and billions and billions of dollars and got wiped all the way to zero. All right, next one. I ended up with 4 Ethereum in an illiquid NFT project. So there's not much liquidity on these NFTs. Like there's not like a stock. Like if you look at a big stock like Apple or something, it's getting traded millions of times back and forth every single day. Cryptocurrencies, they have less volume, so less trading back and forth every single day. And then the smaller projects, they have hardly anything. And with NFTs, they have almost no bids and no sales daily. Like they may have only a transaction occur like once a month. So that's what it means to be illiquid. It's kind of like it's stuck. So my wife bailed me out by organizing a Women in NFTs workshop at her workplace, where she introduced them to buying their first NFTs. And then in brackets, it's got off me. Man, this is the crypto shit. They always do. They're creative. I give them that. But yeah, you don't want to be doing this stuff, man. You got to really be thinking about your long-term reputation. If you want to be making a lot of money long-term, the best way to do it is by doing the right thing, because you eventually your reputation is kind of like a magnet and you start to, attract all of the money. So if you're doing, silly stuff like this and people find out, you're going to do the opposite of that. You're going to be pushing all of that away from you. All right, we might wrap up with this one. We have just finished it. Nobody cares about it, and we have run out of funds to pay server fees. We're a team of 28 that spent the last year developing an actual blockchain game that matches conventional games. Good luck. Honestly, good luck to match conventional games. So it's a startup trying to match conventional games. He's saying it. I think what his main point is, he's actually trying to do something proper, because in the gaming space in blockchain, they just make the worst games. But the way I like to think about this is like, even like Activision, these massive, huge companies, they have millions and millions of dollars that they're deploying, teams with years and years of experience. And even then, the competition is fierce. And to get people to buy a game is very hard. To get them to buy $100 game is very difficult. We collectively spent $200,000 of our own money, as we believe in community projects and are anti-VC. We have just finished it. Nobody cares about it. We have run out of funds to pay. So like if you put $200,000 in, so you're not raising capital from VCs. They may have raised, I'm not sure if they raised money through NFTs or something from the community, but 200K is not going to get you anything. That's such a small amount of money. You can't do anything with 200K, sadly. And you don't want to be anti-VC, because it's set up for a reason. Everybody hates the VCs because they can't get money from them. But if you really have such a great idea, and you prove that you really have the knowledge to back it up, and you have the willpower and you have the character to really, build it into existence, you will get money from a VC. You will get money from someone. There's money everywhere in this day and age. So yeah, you don't want to be anti-VC. Not saying that VCs do everything, correctly and they're all good people, but it's set up for a reason. The system is there for a reason. So yeah, no one cares about it. They ran out of money to even pay for the server fees. The community only cares about the token price and doesn't even want to play the game. That's true. The community only cares about the token price and doesn't even want to play the game. People in crypto, they're not here for the game. They're not here for the utility. They're here for themselves to make money. This is the modern day lottery ticket. That's what it's about. And the community, everybody says community. These people are not loyal. A community is a group of people that are loyal to the cause. That's what creates a community. This is not a community. And if you look at all of the other communities in crypto, 99% of them, they're not communities. They're only there while the price of the asset's going up. If you remove that, they don't play. So with these games, with like blockchain games and all of that, in terms of like an investor, people come to me all the time. They pitch to us at Hardcore Headstart that, hey, this is a good investment. But I always, first question is, would you play the game if there was no money involved? If it was a standard game, you got this for free, how many hours a day would you spend playing the game? And a lot of the time, the answer is very close to zero, because it's super boring. For me personally, I want to be playing Call of Duty. I want to be playing Age of Empires. I want to be playing Halo. I want to be playing all the good stuff, millions of dollars back in it, VC backed, company backed, the current establishment backed. That's the stuff I like personally. All right, guys, that pretty much wraps up today's video. Hopefully you enjoyed it. If you did, let me know and I'll do more videos like this. But anyway, make sure you subscribe. I'll see you in the next one, posting weekly videos.